In 2010, approximately 24 securities fraud allegation cases were made against Chinese U.S. listed companies. At least a dozen new cases have emerged earlier this year as more and more companies are being accused of unethical accounting practices. As we continue to speculate the skepticism of Chinese accounting methods, we would expect that large accounting firms would shy away from dealings with the PRC. However, PricewaterhouseCoopers recently announced that they not only intend to stay in China, but they plan on opening up 5 additional offices and hiring 5,000 new employees by the summer of 2000 of next year. With a wave of new accounting scandals that have plagued the U.S. capital markets, it's becoming more apparent that U.S. investors not only need to proceed with caution, but they need to do more due diligence. With us today is Mr. David Cradaville, who is founder and managing director of Vista Capital Partners, to give his perspective on dealing with Chinese investments. Thank you, David, for joining us today.
Good morning, Debra. Thanks for inviting me.
So I know you've been involved with China for quite some time. Can you give a little bit background on your fund, as well as when and how you began dealing with China as an investment?
We're a global emerging market fund, so we've been looking at emerging markets throughout the world for about a decade now, and we really got active in China beginning in 2005. But as you mentioned, there's been a number of scandals with a number of Chinese companies. Fortunately, we haven't been involved in too many of them, but it's caused us to take a second look at China and reevaluate what we want to do in that region.
Now, in terms of portfolio allocation, what would you say, how much percentage would you say is allocated towards China as opposed to U.S.-based companies?
On a gross exposure basis, I would say most of our investments are outside the United States. We do have a sizable weighting in the U.S., though, but our exposure to China has come down significantly, where most of our exposure right now is on the short side.
And I think, given the experience that you've had in dealing with China, you would see that there's a bit of there has to be an apparent fundamental difference between your approach in dealing with Chinese as an investment, operations that are locally in China as opposed to U.S.-based companies. Would you say there's a regulatory, landscape, or maybe a cultural difference?
People attribute it to a culture, but I think it's more of a developmental issue. Having looked at a lot of emerging markets, I've seen similar issues in Russia where people didn't understand how to work in the capital markets, and I think a lot of companies came public from China that really didn't understand what was required of them, and as a result they've operated under their own rules as opposed to what are standard operating procedures in public markets. And I think that's just a gestation process that companies have to go through before they really understand how to be a public company.
Sure. And as I was going back to my opening statement, there's been a lot of fraud allegations. For example, the software company Longtop Financial Technology, whose auditor, Deloitte, had mentioned or had reported that it could not produce documents without approval from Chinese regulatory authorities. So auditors tend to get caught in the battle between U.S. investors and the Chinese regulators. Given that, it seems that even the most credible auditing firms don't have the ability to do much because they have their hands tied. With that approach, what would you recommend as precautionary measures for investors such as yourself to tap into China?
I think when a lot of investors look at global markets, they tend to rely on seals of approval from whether it be large investment banks that brought the companies public or large public accounting firms that are their auditors. But as you mentioned, especially in the case of China, and I've seen it elsewhere, where the auditors really haven't had access to the information they need, and those opinions probably aren't worth the paper they're written on. So I think in order to be a prudent investor going forward, you really have to do your own due diligence and kick the tires literally to understand what you're investing in. And I think everyone just got seduced by the huge growth opportunities in China, and that really caused them to turn a blind eye to some of the obvious problems.
Right, but can you talk about some of the recent scandals? Because you can provide due diligence, you can conduct your due diligence on the companies, but there's just some information out there that cannot be accessible to the regular U.S. investor. Even if you were to go to China and see the operations, it seems like there's, even the auditors are reporting that there's 5 different types of financial statements that are being produced. Is that inevitable, or is this something that...
No, there shouldn't be 5 different times financial statements, but I think whether you're investing in China or the U.S. or Europe or wherever, it really comes down to, do you believe in management? And if you think management is dishonest, they're going to rip you off, whether they're in the United States, and we've seen that with Enron and other companies like that. We see it in the emerging markets. So it's not just a China situation; it's a personnel, management situation. And I think that's really what you got to get comfortable with. And that means you got to be able to speak the language or talk to people, have people you trust that can speak the language.
Sure.
And go out and visit the sites directly.
And then on the other side of the spectrum, there are some legitimate companies that have fallen victim to a few bad apples and some bad press, including one of them, Harbin Electric, which I'm sure that you've been very familiar with. They've dropped 51% in their stock price amongst rumors of perhaps some scandals, and since then they have proven themselves innocent but also privatized the company. The case against Canadian Solar and China Green Agriculture, they're also being dropped, making a claim that there are some good, solid investments in China. What sectors would you think is less risky and perhaps more of a safer bet?
I would think those sectors that have hard assets, you can actually go out and measure. You have a better chance of really getting a sense of what you got. If it's more software or soft commodities, whether it's media or something like that, you have to be a little more concerned about it. But everything has a risk-return trade-off. I mean, if you believe in management, you believe they're doing the right thing, you may be able to find some good bargains in this environment because everything is painted with the same brushstroke, whether it's a fraud or whether it's a legitimate company. And that's unfortunate to the good companies.
Right. So part of the due diligence process, as you're mentioning, is you have to be on the ground in China, visiting the operations, speaking with vendors and competitors.
Yes.
Right. Okay. And then, on the topic of listing right now, New York Stock Exchange recently announced that they've done more delisting than they have in terms of accepting applications. What kind of trends do you forecast for Chinese companies going forward, or within the next few years? Do you see that a lot of companies will probably want to steer clear of dual listing, or do you think a lot of them will get privatized?
There's a lot of talk about a lot of these companies that are listed right now that we downgraded from the big board to the over-the-counter market,
sure.
Possibly going private and then relisting on a different exchange down the road, whether it be Hong Kong or mainland China. You may see some of that, but that's a costly process and a time-consuming process, and I'm not sure every company is prepared to go through that. I think in terms of the listing procedures, you're going to see a lot more seasoning of companies before they really move up to either NASDAQ or NYSE, just because companies sort of bought their way on to the big board very quickly without really having grown up and matured. And that's what I said in the opening statements, is that you see this in all different markets where companies haven't really grown up enough to be, for using the baseball vernacular, they're not in the major leagues yet. They're more a minor league team.
Sure.
And people are trading them as a major league stock because of the opportunity in China. And the numbers are huge. But if they don't know how to behave like a real company, then they need to be treated on the bulletin board and elsewhere.
Right. And a lot of these companies actually, got onto the major U.S. exchanges through reverse mergers. Can you explain, what reverse mergers are and why it's an enticing vehicle for companies to go through?
It's a much more cost-effective way for companies to go public than doing the traditional IPO process, and that's what lured a lot of these smaller companies to go public that route. And with that process, you really didn't have the full disclosure of all the financial statements and the full seasoning of reporting and everything like that people were aware of beforehand. So people end up getting sold a bag of goods, unfortunately, in many cases.
Right. And basically they don't have to go through the rigorous SEC filings that, regular IPOs have to go through.
It's a much simpler process, yeah.
Okay. Now, on to your personal preferences. Is there any companies in particular that you've been, looking at these days? Any major, Vista Partners stock picks?
Well, we've been looking mostly in the alternative energy space, and I've been looking at some small and medium-sized companies actually based here in the United States. Given what's been going on in Europe and the problems with China, I'm seeing more value in the United States at this point. So we'll see how that pans out going forward.
Very interesting. Okay. Do you have any further notes to our viewers on, any, I guess, any advice in terms of proceeding with caution and how to deal with, China?
I would just say do your homework and don't get seduced by the large numbers of the China's market.
Okay. Well, thank you for joining us on today's program.
No problem. Thank you.
In 2010, approximately 24 securities fraud allegation cases were brought against Chinese U.S. listed companies. At least a dozen new cases have emerged earlier this year as we see more and more companies being accused of unethical accounting practices. As we speculate on the skepticism of Chinese reporting system, it would be obvious that large accounting firms would steer clear from dealings with the PRC. However, PricewaterhouseCoopers recently announced that they not only intend to stay in China, but they expect to open 5 additional offices and hire 3,000 employees by the summer of next year. Following a rash of accounting scandals on following a rash of small accounting scandals on small and mid-cap companies, it's become apparent that investors not only need to do more due diligence, but they need to steer clear and proceed with caution. With us today is Mr. David Cradaville, investor, founder, and managing director of Vista Capital Partners. Hello everyone, and thank you for joining us on today's Dialogue on the Streets. My name is Kelly Rowe. In 2010, approximately 24 securities fraud allegation cases have been made against Chinese U.S. listed companies. At least a dozen new cases have emerged earlier this year as we continue to see more and more companies being accused of unethical accounting practices. As we continue to speculate on the skepticism of some of Chinese accounting practices, we would expect that large accounting firms would steer clear from dealings with the PRC. However, PricewaterhouseCoopers recently announced that they not only plan on staying in China, but they expect to open 5 additional offices and hire 3,000 employees by the summer of next year. Following a rash of accounting scandals that have plagued the U.S. markets, it has been apparent that U.S. investors not only need to do more due diligence, but they need to proceed with caution. With us today is Mr. David Cradaville, investor, founder, and managing director of Vista Capital Partners.